Bitcoin and crypto are setting up to explode. You've probably heard that a million times before, but I want to show you in today's video how it can explode and the majority will screw up this opportunity again. Really, really simple stuff that you can apply to any altcoin in the entire market space, provided you understand how this next part works. Make sure you hit that like button, subscribe to the channel for more educational content and analysis-driven market research. You found your home of macro cycle analysis with me, Jason Pezzino. We cover Bitcoin, cryptos, the stock market, and the real estate cycle here, looking at the data and delivering that to you so you can make up your own mind of what you want to do with your money in the markets. With that said, let's start with the traditional markets. I want to have an overall view of what's going on in the markets before we dive deeper into Bitcoin and cryptocurrencies. Are the markets going to continue up? Are we still seeing data that there is more chance of the cycle continuing higher amidst the correction that we're seeing in the stock market at the moment? Let's have a look at three major points. There have been major narratives over the last several years. The first, the yield curve inverted. Now, when this was first brought up, you had the yield curve inverted. There was going to be a recession. There had to be a recession. The market was going to collapse because the yield curve inverted. Then it didn't happen. And then the narrative shifted to once the yield curve uninverts, then we'll get the recession. Let's just have a look at years and timeframes until a recession once the yield curve inverted. So this goes back to the 1950s. And you can see the lead time to recession. Here are your months. 8 months, 7 months, 24, 8, 17, 10, yada, yada. We're currently at 24 months with this yield curve inverted and counting. The average is 14 months until there's a recession, median 11.5 months. So great data here brought to us from Ryan. So in this case, in 1965, there was no recession. Maybe we're going for something like that. Maybe this is going to be a lot longer than 24 months until there is a recession. Now, you're probably wondering, why the hell am I looking at this if this is a video about altcoins and then pumping, and how do I avoid these problems? As I said in the intro, the point being is, I don't think, and that's what I'm delivering to you in this analysis, is that if you're going to see a recession, if should be a collapse in 2024 or 2025, it's almost, it's extremely unlikely that you're going to see any altcoin season. Altcoins are just not going to magically pump while the world is burning down and there's some sort of major crash in the hopes that all the degenerates finally get their day in the spotlight where they get to make all this money and then go and buy up all the cheap assets. I don't think it's going to work like that. You might have a different view. That's okay. That's what the markets are all about, right? So we're just looking at the data here and you do what you want. Essentially, you've got the yield curve inverted. This would suggest to us that we should have seen, looking at the data, we should have seen a recession 14 months after July 2022. It didn't happen, and now we're at 24 months, which is the equal to the two longest periods before a recession. So maybe next month we get a recession. Who knows, right? I don't think it's likely. Even if it was likely, the charts still haven't shown signs that they're going to break down before we see a boom first. So we've still got this ongoing boom with how high the stock markets have risen. This is the beginning of the year. You can see January and the price to the top has been basically up 18%, now currently sitting at 13%. There's the current price at the moment. So roughly about this 13, 14-ish percent since the start of the year. But if you take it all the way back to this cycle low back in October, or even go through June, July, which is where this yield curve inverted, July 2022, that is even a much greater sign here. Look, there's the end of July. Let's take it from August to where we currently sit, 32%. So pretty significant gains from that first point of the yield curve inverting. So now the weight is on for the yield curve to uninvert, and then maybe we have another lead time of moving into a recession. So doesn't look like things are about to collapse. Let's move on to the next piece here. Election time. Election is coming up at the end of the year. Stocks tend to do well when the incumbent decides not to run. You've got a number of different colored lines here. This just represents the stock market. This goes all the way back to 1900. And you've got each of the different presidents here which decided not to run: 1908, 28, Roosevelt, Coolidge, LBJ, Wilson, Truman, and then the current year, which is blue. So in the case, which you might not be able to see here, let's bring that up there. 49.5% in the case of the orange line, which was Roosevelt in 1908. You've got this green line here, 1928, also about 48% from the start of the year, 16, 11, and 7. So average, possibly somewhere in the middle. Maybe it's going to be something like this. Maybe it's going to be something like 50%. Who knows, right? But basically, we know Biden isn't running, and 4 out of the 5 saw stocks gain on average 16%, and we saw the biggest gains from these two. So that's the next big talking point for the year, the election. Biden's not running. I think most people don't really care now. It seemed like it just got wiped off the cards for Biden, and everyone's jumping on the Trump bandwagon. And so far, well, obviously there's been a slight correction, but we're looking longer term here. Most of the data points to a higher end for the stock market after this election towards the end of the year, obviously the closeout of the year. They've put in a reasonable correction now. Let's have a look at that. You've got the high to the low, about 11% for the NASDAQ. That's the current move to the downside. And this big fat arrow that I've got here on the chart, last time it did 12%. So if you were a man that loved to work off some data here, sure, the market could go lower. Maybe it goes to 12%, 13%, 14, 15% lower from that high measured down, right? But just looking at that previous correction, roughly around that 12% was the exact bottom before the market went higher. So if you're looking at a ballpark area of entering to a position on the stock market, maybe in this zone here that you can see on the chart could be a reasonable area to enter. We had the move here from 18 down to there, 17, about 9% of a correction throughout this particular move to the upside. And then the other correction is just back through here, one of the larger corrections. Having a look at that low there, about 13%. So that's this top to this low here, 13%. So 13, 12, 9, currently at 11. Let's see what happens moving forward, but it could be within a bit of a low period as we speak. So that leads us over to crypto, but I got a big announcement for you guys. Tomorrow we go live with the Ultimate Trader Accelerator. You can find a link to this in the video description. I'll pin it so that you can easily find it. It's absolutely free. Just click that link, name, email address, password, etc. Register for that. And we're going live Thursday morning with all of our traders there for the Ultimate Trader Accelerator. New product, new course that we've got for you guys for free. A couple of steps on how to get into that. But yeah, if you're interested, going live tomorrow morning, Thursday morning. Let's have a look at BTC. But first, some of the news headlines. We've got Solana. Solana total weekly revenue eclipsed that of Ethereum. Solana is heading higher. I've got that as well for you guys in just a moment, just looking at the price chart here. Hitting 25 million, slightly higher than Ethereum's 21 million. So this is their weekly revenue. Solana also saw its highest single day revenue in 3 months last week. Validators making 5.5 million on July 28th. And of course, it's probably down to meme coin frenzy going nuts on their decentralized exchanges. So spot trading on the DEXs are making these fees. And if Solana is actually, in fact, that much cheaper, well, it is, we know that much cheaper in terms of fees than Ethereum, you'd have to wonder just how many transactions that is. And I'm sure someone can go and find that information. I don't really care at this point. We just know that that is going to be a lot more transactions than Ethereum, because Ethereum's fees are so much higher to get to this particular revenue, and Solana's eclipsed that. So there's obviously so much more trading going on over on Solana. Also, Bitcoin, US government sends $2 billion worth of Bitcoin to a new address. I believe this was on Coinbase. So they've sent a whole lot of Bitcoin to a new Coinbase address, and people are freaking out. That sent the greed down here. So it was 67 down to 61. That sent the price ever so slightly down. I don't know if people are really freaking out about that, but nice thing that we're seeing some sort of slight correction. As we've been talking about on the channel, the fear and greed index is something that we want to see reset every so often, especially when it gets a little too hot. Is this enough reset? Obviously, time will tell. I ideally like to see it get back into neutral, but as we can see from history here, this is only 1 year. it can sit in greed for many, many months. There's October 2023, November, December, and into January before it dropped off into neutral and then took off again. That's neutral because you're at 50 there. It didn't get into fear, just stayed at neutral and then continued on. It took more months, more, and then only just dropped into fear last month actually, or late June, early July. So yeah, good part of quick maths, what's that? About 9 or so months from October through to July, where it didn't hit any sort of fear. Continuing on, BTC still in a pretty solid position going into the end of this monthly close. Another 22 hours to go until the month closes. Tomorrow's video, or Friday, but anyway, end of this week, we're gonna have a big video on the monthly recap and the monthly forward look on the markets, Bitcoin and cryptos, and also the stock markets as well. So make sure you are subscribed, like the content, you know the deal. All is looking good. That's what we want to hear, right? We don't want to hear that this thing is going to collapse. The levels below 61K, any sort of closing prices under 61K would be the start of something bigger. Could be the start of something bigger, but for now, while the price remains above 61K and ideally above 63,600, which are these 3 bottoms here, 2 swing bottoms, and this little bottom right there, plus is basically on the 50% of this entire corrective range. While it remains above that level, things are looking pretty strong for any sort of eventual move to the upside. So corrections are welcome, especially to 63. Worst case, I think around that sort of 61. Bitcoin looking good. Over to the monthly close for cryptos. Looking pretty good. This is total cryptocurrency market cap. This is really, really interesting. And I'll go into further detail. Maybe now, let's do it. Volume. You can see here, big volume coming in. Market corrected, but look at the volume on the down bars. These are monthly bars too. If you like candles, check out candles, whatever, right? Doesn't matter. It's giving you the same data, just looks slightly different. Red, the volume's dropping off when the market moves down. The volume picking up as the market tries to recover. Now we're into this particular bar here, and it looks like it's going to put in spinning top, doji, whatever you want to call it. I use bars. That's how I started trading 2010. So whatever that is, 14 years ago, started investing 17 years ago. I use bars, and this is called a key reversal for my type of analysis. Same thing if you use candles, just a different name. But the point of it is you had a big push down within that trading session and then a big buy up. And that is generally a sign of a low forming, or it is the low. And then you're going to see some sort of eventual upside. So basically like a pivot point in the market. And it's good to see one of those, especially after 4 months down, especially after a big move up. And to add to that strength, it's sitting right above the 50% level. This 50% here, top to low, right through the middle. And look at how close it came to hitting that to the exact dollar and then bouncing away. So good to see some strong buying coming into the market as it hits that low. 22 hours to go. This could be a good close, and I'll go into more detail in the monthly analysis later this week. You might notice that the volume is dropping off, but that's okay too, because it's in a trading range, and eventually the supply gets bought up. You see the volume would drop off, supply gets taken out, and then as it breaks out, maybe you would see a bit more volume come into the market because you basically got the laggards, those laggard sort of traders, really trying to jump on board with that trend quite late. And then eventually, you know, it leads to that peak and so on and so forth. Volume picks up again for the red months, basically the corrective months, and the volume starts to drop off for the green. You know, on the way down, no one's really buying, and it just keeps exacerbating the move to the downside. But we don't need to worry about that now. Things are looking relatively good. Let's see how it closes in 22 hours. This is the total cryptocurrency market cap. Total cryptocurrency market cap, excluding Bitcoin, ETH, and stablecoins, also has a very similar pattern. Notice that I've got it, this is on candles, because this is a TIA indicator here. We can double click this and we can change it from candle to bar if you prefer so. There we are. Yeah, similar sort of signal here, right on top of this previous range that it hit, the resistance, support, bam, comes in at support, attempting to get to that 500 billion. Ideally, we should see this above 500 billion Probably in August would be a great start for this. Nice to see the volume also increasing. So everything's looking relatively good. And this goes hand in hand with what I was discussing in yesterday's video, looking at this last tipping point of the cycle for the crypto indexes. Tipping point back here, 180 billion. Tipping point somewhere around that 600 to 700 billion. Looking pretty damn good that we could get there over the second half of 2024. So we got that idea on board. Looks like things are picking up. It's not going to seem like an absolute party right now. The party feelings are these bars here. The party feelings are towards the end. So if you want those feelings in your jellies, that happens towards end of moves. And it happened again at this time when all those jelly feelings were coming out in November and January, February, March. You don't know what I'm referencing there. You know, it's other YouTubers talking about degenerate altcoins, and they typically talk very loud at those peaks and get really excited by the price action. And sure, you're still going to make some gains towards the end of the peak, but yeah, it's probably not that big long party that's going to go on forever that you've seen in the chart for a good part of 2 years. Look, 2019 to 2021, 2 years of it accumulating, and then it breaks out and it doesn't last all that long. So if you get those feelings in your jellies, just be careful, all right? We're going to talk a little bit more about that with the cryptocurrencies that you really need to watch out for when it comes to these times in the party time. Not much change on ETH since yesterday. I think tomorrow is going to be a good time to recap this. This is ETH versus BTC. We can see that it's still holding ground. US dollar and ETH, so ETH USD, still just holding above 3,200. So yeah, a few bucks, but 22 hours to go. Let's recap this tomorrow. There hasn't been much change in terms of the analysis. Still in a good position. Stronger would be above 3,400. If you can get a nice solid move, 100, 150 bucks in the next 22 hours, that would be so much better for Ethereum. Solana, on the other hand, could be its second highest monthly close of this bull market, going all the way back to December 2022. And the volume profile also looks relatively good here on Binance. You can see big volume come in at the top, it corrected, and the volume dropped off on that correction. So weren't as many people selling Solana. Look at the drop off there as well. The red months there, big volume on the breakouts, not much volume on the selling. So you've got this good accumulation occurring, and then increased volume compared to the last 3 months as the market rises again and hopefully closes above 50%. So in one of the stronger positions. That is also showing up for CAS, 2 days above this 50%. Where is it? The major bull market. And we want to see it get above the bear market 50%, which is this level here at 300, right? So you got multiple zeros and then the 3. That would be ideal coming into the end of the month. Look at the monthly chart here. Just a few more ticks to go to get above that. I do want to cover Sol USD, 180 bucks, also looking good above the 50% level. So yeah, all of this is looking relatively healthy. Let's move this to the top, to the bear market range, 134 bucks. Barring some major catastrophe for Solana, probably going to close above 134, which is the bear market 50% range. So all is looking relatively healthy for Sol. So a big move underway. Looks like there are going to be some pretty significant gains for this cycle. With that in mind, this is something to be watching out for. You're going to hear lots of narratives. Look at it already starting up here. Memes, Solana, Eco, AI, gaming, RWA, real world assets, Politify. I guess this is your Trumps and Kamala Harris coins and all that sort of stuff. I don't know. I don't really care. The main thing I care about is looking at the volume. And should we get into some of these small junky coins? Here is an example. Pepe Unchained. Look at that. This would just be a godsend to have your crypto do that. This is what I think most new traders think charts look like. They expect them to do these sorts of moves with almost no corrections along the way. Like that is just exactly everyone's dream. Everyone buys here and then you hold on for the ride, and basically you sell just before a massive red bar comes in that wipes out the entire gains that's been seen over the last month, right? I think this is what everyone hopes and dreams for. But although you could get charts like this, it's almost impossible to get a significant position into the market here and maybe even get a significant position out of the market. So although this is the stuff that everyone's looking for, the big trouble is coming down to the volume in the market. If you haven't heard this before, definitely pay attention. Now we're in the top 100 or 200 cryptos here. That's what I'm looking at along this scale, right? Coin market cap, top 100. What you want to do then is have a look at the volume. So let's go back to the top, click on the volume. These are the highest traded markets, obviously, Tether, Bitcoin, Ethereum. If we didn't have Tether, maybe even USDC, definitely if we didn't have Tether, this market would absolutely collapse. So anyway, moving on, scale this to the lowest volume coins here. So you got $1 million in 24 hours on the KuCoin, Gate token, 2 million, 2 million, nearly 3, 4, 5. Then you have to look at what trades are going on within that particular market. And I think this is a good example. I saw this morning. I thought, what a great example to have a look at so that we can hopefully learn something from it. So Pepe Unchained. This is only on the DEXs here, Uniswap. You can see this thing just go absolutely bananas. A month ago, it was basically trading under a cent. Now it's at $2.12. Now you can look down the order history here and you can really start to see what money people are actually making or what they're actually selling out of. And if you're selling out $19, $97, it's going to be a long journey to make any sort of significant money for your portfolio. For some, this might be worthwhile. Of course, they're going to start paying a shit ton of fees on Uniswap, and maybe it's really not worthwhile selling out $20 and $97 at a time. And then on top of that, you got this sort of stuff happening. Now, that could be legitimate trading. It might be fake trading. You got them selling at 187, then buying back a cent higher for 16 grand. So in and out with 5 ETH there. And again, you see it sort of pop up time and time again. 18K, in and out, selling, buying, 1 cent difference. Maybe it's market makers trying to put more liquidity into the market. But essentially, when you look at the rest of the trades here, total USD trades, you can see that it's not even worth your while. You're better off just working at McDonald's instead of trying to trade things for $6, $11, $97. By the time you weigh in the risk, it might not even be worthwhile, right? And the fees and the time it's taking you to do all this and learn and all that sort of stuff. So without not trying to make a short story too much longer, definitely pay attention to the trades themselves. Have a look at the volume. Look at that volume on 24 hours, 50 grand. So even if you'd put in $1,000, made 200x, you barely could take out 50 grand. But even if you were to take out $1,000, you'd probably start to collapse the market. So your first area of exit would be maybe $2.08, and then $1.80, and then $1.50. So every few $100, maybe you're dumping the market a lot. So yeah, basically try not to chase these. I don't think it's a good idea to be chasing these sorts of things. This is really, really risky stuff. You do you at the end of the day, but it's something to pay attention to. Definitely the 24-hour volume. Look at the liquidity here. The fully diluted value is nearly 17 billion on this thing. You could basically come back to coin market cap, check out the volume, see if you've got something that's trading at least in the millions. I mean, you want more than that. Personally, I think to be able to have some sort of liquid market where you're not going to lose too much on the spread. So the spread is basically what is the difference between the selling price and the buying price. So what are they listing them at, and how much depth is there to each of those prices on the way down in the order book? Is there a big gap between prices? Say you had Bitcoin and there wasn't much on the market. It's trading at $66,000, and that was for 0.0001 Bitcoin. And then below that, you had to buy it at $56,000 for another 0.0001 of a BTC. And then you had to go all the way down the order book to $46,000 just to get another 0.0001 again. You can see how this thing starts to work out. This sort of thing could erode the gains that you think you've got in one of these small cap cryptos, as opposed to just doing the research and understanding the volume, the spread of the market, basically the depth of the order books as well. And basically just trying to find something that has some longer term gains there that you could easily get in and out without affecting the price too much. Because the last thing you want to do is think you've made an absolute fortune and then try to get out of them and basically see it all get eaten away by not having much depth in that order book. So on a relatively quiet day in the markets, I thought I would bring you something a little more educational on how to read and understand those order books. Maybe a bit of a lesson here, especially as what I think is happening is these markets heading up over the end of 2024. If you want to see more of that, let me know in the comments section. Just some of those little hints and tips about how these markets work. Pinned comment, let me know down there. Otherwise, hit that like, subscribe to the channel, and the Ultimate Traders Workshop is tomorrow. The live stream is up tomorrow. So make sure you join that, link in the top of the video description, absolutely free. And I'll see you over there for our first live stream for the Ultimate Traders Workshop. All right, guys, I'll see you back here on the channel very soon. Until then, take care and peace out.